Hello everyone, welcome back to my channel. So this video marks the end of the week number 90 in this road to 100k realized return challenge, and I'm gonna send this question up in the air because I think this is what in the head of most investors like me. What the F just happened this week? I'm at loss of words to explain what happened. The markets shortly after I posted the video on Monday, and this all started on next Tuesday. The markets simply went absolutely ballistic on the back of apparently continued negotiations between the US and Iran towards a potential end of the conflict in the Middle East. But these apparent negotiations, along with the continuation of a ceasefire, basically, was like rocket fuel to the markets, and the markets just started to climbing up very, very sharply. I'm going to show you here. Of course, the Nasdaq was one of the main the main indexes that benefited the most with this situation, and this is the weekly chart, and this was no stopping. It was absolutely relentless the entire way through. Not only that, on Thursday there was, and it was mostly responsible for this continued uptick here in the first few hours of the session, there were also news coming out that there was some sort of negotiations going on between Israel and Lebanon, and even though this subsided a little bit more here towards the end of the session, another uptick was yet recorded yesterday on Friday, as the news broke out that Iran announced that the Strait of Hormuz was, quote unquote, completely open. And the US President Donald Trump even sent a post on Truth Social saying that he appreciates the fact that Iran decided to do things this way. And yeah, this was simply no end in sight with this huge upswing the entire week. Things subsided also here towards the end of the day on Friday yesterday, but still it ended up being a good day for the markets, and a week that this has been almost unheard of. As far as I can see on the news piece, this was the fourth. This only happened four times, or about four times in history. Such a large sequence of increases in the market ever, and this was the largest uptick that occurred consecutive and on the same scale that occurred since 2013, I believe. So this was really one for the ages. And keeping in mind that this was all the way up until I would say here until the end of Thursday. This was basically fueled by hope or faith that a complete resolution of the conflict would break out, but yeah, or would be struck. But yeah, this is something that I can't really tell or remember anything related that could happen like this for a long time. And this also comes to show that if we had adopted the strategy that we used last year, of selling calls below our strike price, our cost basis, we would have been completely and utterly burned out with that situation. Even so, at this point, our calls of 630 for the Qs are very much in the money. They are at a huge loss, but this just means that we will have to wait until this call expires so that these shares could be sold. And we will continue on because with this strike price, we will break even on our cost basis. We'll keep the premiums as a profit, and we can just move on. As for the events for this week, the main highlight, which was, I believe, not that relevant given the momentum that the markets were going into, the PPI was released. It was not as severe as it was expected, because here an increase was expected, but it was less than what the actual numbers were less severe than what was the overall expectation. And here you can see that it increased 4%. I can also show here on Market Watch. Let's see if I can find it here. So yes, there it is. All right. So here you can see here that there was no expectations in our Market Watch for the week, for the year on year, but here the core PPI, and of course discounting food and energy, was much better than it was expected, even though, and also on the headline it was expected 1.1, it ended up being just less than half, 0.5, and so this also contributed to stoke the markets. But yeah, this was basically the only relevant event that took place over the week. Netflix, I haven't seen the earnings, but there was a dive on the stock once the earnings were released. We can see it in here, and yep, yeah, this was basically what happened after earnings. So there was a large pull down here, a large gap, but this did not affect the overall behavior of the market, and things continue as they went, yeah, basically with no stopping. Now, this was basically what turned out this week. The markets again ran up to record highs. They are currently at all-time highs again, and yeah, this is pretty much it. We can dig further into the data, but there's no need to. Everything went pretty much ballistic at this point. Let's see what happened here with the Fed funds futures. This is absolutely no change. The markets are giving pretty much a near certainty that next meeting on April 29, the rates will remain unchanged. All right, so I don't believe that the markets or investors for that matter are even weighing up any are giving to the market or discounting any sort of unforeseeable event given when it comes to the Fed funds or the Fed decision. So yeah, this is pretty much it for this matter. Now, when it comes to the trades themselves, this was actually a quite productive week, given the fact that we were able to only work with only a less than half or a smaller portion of our funds, of our accounts, because most of them are tied up still in quite a lot of shares. But still, and this is IWM shares, we were able to sell back. Of course, the market is at all-time highs, but this was our take for the week. Let's just put here 0, because this is of course mark to market, so it really does not matter. But here, well, where is IWM? It's here, so it's 84 in here, and then we managed to collect all these premiums. This was one of the most active weeks that I can remember, because we were constantly rolling up our positions to higher strikes, because this market was simply not stopping and the puts were losing value extremely quickly. We still managed to collect a little bit over $894, all right, which I believe it was quite good if we discount this premium over here that we collected already at the end of March. This will account for a little bit over $800, a little bit more than that, 810. And given the fact that we used for this particular set of previews, we used slightly more than, I believe, $60,000, or rather 60,000 euros, which accounts for more or less 70,000, close to $80,000. This was a very good return. But yeah, and you can see also the rates of return here are pretty spectacular. Now, looking at the trades themselves, and I'm going to take some time on this because there were a lot. We went through these. These are the ones that I explained at the previous video. This ended up being a mistake, but of course we had no idea what was going to happen. The stock at the time was trading at around 68-69, the ARK case. So we could not get enough premium. Actually, the calls were not available to be sold at 75.5, expiring this week, the 17th. So we had to extend for another week. But yeah, after the stock skyrocketed, now these calls are very much in the money. We are almost $4 over the strike, so we will have to wait. We have again a loss. We are not going to buy this back, obviously. We're going to simply let it expire, the shares being sold. This is our cost basis, so we will break even on this one as well. And yeah, and then we will start over. But concerning the trades, you can see here that right at the next day, at the beginning of the session, because of the extremely rapid rise of the shares, all the shares that on which we had some exposure, we had to buy back these silver shares on this ETF. We bought those back at 6 cents. Why is that? This would expire the next day on Wednesday, but we would have to wait two more trading sessions, 2 full trading sessions more, to get this additional value of 6 cents. Given the fact that we bought these at 44, or we sold these at 44, it made no sense to wait 2 more trading sessions to get the other 6. We simply bought those back, rolled over the position to a higher price, to a higher strike. We received 27 on these. And then still, you see here, within the next day, these are all trades that we did on Tuesday. So all of these, yes. So then we rolled up, we bought back these ones on the SLS, on the junior miners. Let's just say like that, because this, I always get this acronym wrong. We bought back at 5 cents, considering that we sold these at 25 also. And this, keep in mind, it's until the end of the week, so we would have to wait 4 trading sessions, 4 full trading sessions to get these last 5 cents. Made no sense at all. So we bought these back, rolled up again to strike price dollars from 29 to 31, 25 cents more. We bought back our GDX again a little bit later in the session. It was a 93 strike price. We bought back, and the reason for that is because we received 58, and after 1 session it's already trading at 15. No need to wait anymore. We rolled up from 93 to 96, bought back at 15, sold at 40. And also, to wrap up the day, we bought back this one at 10 cents, the Yahoo, which is also a gold ETF. We bought back at 10, having sold it at 29, right? And after buying it back, we rolled up from 86 to 88.5 strike price, and we got 25 on them. Actually, they were split. We bought back one at 26 and another 25, so we got an additional $1 on that. The next day, here it is. The next day, because yeah, we bought back. This is actually the second time in this week that we bought these SLV backs. You see here we sold at 68, and And yeah, we bought those back again at 1 cent. They went from let me see, yeah, they went from 27, yeah, which it makes sense because they would expire on this very day. All right, so the theta was extremely high at that point. We bought it back. We could have let them expire on this day. They would expire this day, but we had still 5-6 hours until the end of the session, and we could get an additional profit on this. So we bought back at 1 cent. We sold at the same maturity, expiring the same day. So this was basically 0 DT option. We sold again at 8, so we collect some more profit on this, while not extending, while keeping the maturity at the same time. So we squeezed a little bit more the lemon, the juice from the lemon. And we bought back our SIVR, which is also a silver ETF. We haven't touched this one yet, so yeah, we sold it at 55 on Monday, and we bought it back at 10. So after just 2 and a little bit of the third session, we bought it back at 10. We rolled up from 66 to 73, got 35 cents more. We will also receive a rebate on the commission. And this COPX that we sold at 56, this put rather, we still bought back at 10. So from 55, right? From 56 rather, 56, we bought back at 10, and then we rolled up from 77 to 82, and we received 35 cents more with another rebate on the fees. And in the last one, we still had enough money to sell a put on the junior miners, the junior silver miners. We got 13 cents on this again. And keep in mind, we were doing all these trades and we still managed to go quite conservatively. We have seen all the trades up until this point, and you see here that the probability of profit was always or almost always in the high 80s. So we are talking about mostly 13, 15 delta options. All right, so this was quite conservative, and we still were getting very good returns on this, I would say. But let's move on. For the 16th, as you could see on our scorecard, there was only one trade that we did. This was the expiration of the SLV, so we basically used this collateral that was released from these dying puts, and we sold at a slightly smaller strike price because the price had pulled back a little bit, and so we sold at 24. All right, and then in the last day, which was yesterday, and let's keep this aside for now. Yeah, this is what matters. So, and then more trades to do. I really wanted to squeeze as much as possible from the fact that the prices continue to go up, and even though the premiums were already very short, very small, because these were basically 0 DTE options because they would expire on the same day that the trade were made. We bought back our GDX, which, keep in mind, we had, let's see what it is, GDX. Yeah, we had sold it 14, 16. Yeah, we sold it at for 40 cents here, and we bought it back here at 4, and we still managed to roll that up from 96 to 98. We got 10 more cents for 14 total, so we got an additional $10 on this, excluding of course the commissions. We bought back those SLV that we had sold at 70 for 24, So we bought those back at 4, so we got 20 cents give or take on the deal. And then we still rolled up a little bit more to get 11 more cents. The junior miners, yeah, they were bought back at 2 and a 3. These ones, the 31s, were the ones that, let me see what it is. So these 29s, yeah, these had already been gone. Yeah, these were the ones that we sold initially, the 31 strike price. We sold at 25. So at this point we bought it back at 3, and the other one that we sold at 13 we bought now at 2. And a bit greedy on my part, I must say, we sold only one at 33. And why I left it for the end, the reason is because I was a bit hesitant to use this 33 put, because the probability of profit was only 78%, so this was a 22 delta put. But the reason I selected is that the strikes immediately below were already unavailable to sell options. I tried to sell the 32.5, and given the fact that the price ended at 32.92, if I had sold the 32.5, this put would have died worthless. But because we sold the 33, we ended up being assigned, slightly so, but yeah, we were still assigned for a small difference. And again, because we still had the money from the puts that that the premiums that we accumulated and all that, and the buying power that we still had available, we still managed to sell another put on GDX with a 98 strike price. So we added a second one relatively to the one we already had here. But in the meantime, the price had continued to rise, and we could not get the same 14 cents we got in here. We got only 9, but still, I believe it was still a good deal. Yeah, we still got 30%, given the fact that it was a 10 delta, and with only 1 day to expiration. It was a 0 DTE. 30%, I think it's still very, very good. Yeah, and that's the way it ended. Of course, these IWM shares were sold. These calls were very much in the money. The price, I believe, was quite a way up. I think it was quite a bit of way up already. I think it was close to 270. It ended up the day at 276, give or take. Now, after market, it went up to below 270, but it really doesn't matter. The price, the puts were in the money ever since here. See here. But yeah, we already had sold these calls at the end of March, when the market was much, much, much lower. The market was around here at 240 something, and so yeah, this was an extremely fast rise. And looking here, because you also had this put was assigned, so we got 100 shares of the junior miners again, with the cost basis of 33, and the rest of the puts basically expired worthless. So keep in mind, we did manage to do all this with just about $70 something thousand, which was very good. Now we got more money to play with because we sold our IWM shares. We still have these large losses in here. We just let these options die and let the shares be sold. Now, one important topic is that we are already at the end of week number 90. I would like, and I made this a personal objective of mine, I would really like to finish this challenge and reach 100k before the week 100. With this very strong recovery, I think there's a reasonable chance that we may still get there. I made some calculations. I already saw how much realized gains we already have. This is the amount that we currently stand at the moment. So we are about 17,300 and yeah, some change, 17,300 and some. So after this video is over, at the start of next week, we have 10 weeks remaining. So we have to get per week an average of $1,730 something dollars, which I believe, given our current account size, it's feasible as long as the market stays relatively stable. If there are no more wild moves, especially moves down, I believe we can still get there, but we'll have to see. For the time being, this following week will be one that will for sure improve relative to the previous one, because now we have about $53,000 more to play with, which were the proceeds from the IWM shares. So we will still be somewhat limited because we have most of our money tied up in these Q's shares. So we have to wait one more week to see these shares being sold and the money being released. But then the week after, and assuming the market does not pull back to a point in which these puts will die worthless, we will get back our most of our accounts back in cash, and so then it will be a whole new ball game altogether, because we'll then be able to sell puts with most of our cash, and that will certainly bring our earnings or our profits into the thousands. And if you recall, if you had seen the videos that I posted on this challenge over the month of October, in which we had a quite smaller account size, I would say in the about 250,000-260,000. If you recall, there were weeks we were getting about $2,000 per week. And so with this much bigger account size now, there is no reason to expect or to believe that we won't be getting 25, 26, 27, or perhaps even close to $3,000 per week, assuming, and this is very important, assuming that the market conditions stay as they are at the moment. We don't need necessarily the stocks to continue to rise. We just need the market to remain relatively stable, so that our puts can continue to lose their value over time because of the theta, and then we can roll over into new positions without having to keep shares for a very long time due to large unrealized losses, because that then drags the premiums of the calls we have to sell close to nothing. So this is hopefully the way it's going to be, and if that happens, we have pretty much everything in our hands to finish a challenge in a few weeks, and we will, and in that case we will be able to finish the challenge even before the week 100 comes around. But for next week, I believe that the earnings will be our biggest concern, because assuming the war is over, and I don't see much more economic data coming around next week. I believe we'll have a look here. So next week, yes, right, none of this matters. Yeah, so it's going to be pretty much a dry week. There may be something coming out of this flash PMIs from services and manufacturing, but when it comes to earnings calendar, US stocks, let's see, SPDR, yeah, I believe, let's see, earnings calendar. Of course, these lists are always a bit limited. Not all earnings may be here, but it's going to be a very heavy week for earnings. So nothing here, nothing here. That's right. Yeah, of course. So for Monday, it's pretty much a clean sheet. There is nothing here to worry about. Interactive Brokers, Capital One, United Airlines, Equifax. So no. Also on Tuesday there is nothing. On Wednesday we have Tesla coming in, so expect some volatility in technology index such as the Nasdaq. Now we have Tesla, we have IBM, but yeah, IBM will, at this moment will not be much of a market mover. Rentals, yeah, there is nothing here. Yeah, Teledyne, no, it will not be much of a market mover. Intel, this can be important. We have Lockheed Martin. This is, of course, one that guidance can be interesting given the fact that we have a war ongoing. We have Comcast also. This can be also potentially some market moving, somewhat. Yeah, but there's nothing here as well. And on Friday usually is a lighter day. Companies usually don't. The biggest ones usually do not report on Friday, and yeah, that's pretty much it. It's only, as far as we could see, it's only Tesla on Wednesday. So shares that or puts that we will sell with technological exposure, it would be good to extend it for beyond Wednesday so that we can capture some of the volatility that for sure will be there. But for the time being, yeah, this is pretty much it. Feel free to leave your comments in the comment section down below. I'm also available on LinkedIn in case you need to ask me any questions. And as always, feel free to like the video and subscribe to the channel. And we'll reconvene either on next Monday in the evening or on Tuesday morning to start the week number 91 in this challenge, which hopefully will be the start of the home stretch, which is, of course, a long time coming. I'll see you there.